All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. I realize I'm jumping on a little bit early here, so many of you probably will be hearing this on the recording. But wanted to jump on since there's nothing really close to even triggering right now for the challenge. We do have 5 stocks with crossovers. Let me show them to you here, but none of them are creating triggers, and you'll see why. UPS has a 3-7 downside crossover in it today. But you'll notice, also trading up, coming off of highs, right? And a lot of things, that's kind of why we haven't seen downside triggers, is because many of the stocks have been just coming off of, these fresh new highs or intermediate highs rather than lower highs. That may mean that if the market goes straight down, cash on the straight down, but it is one where I'd rather be cash than in calls, I guess. But we have UPS, we have Chipotle, Mexican Grill, the same concept. Procter and Gamble, which I showed this morning, same concept. All with downside 3-7 crosses here to it. We have one with an upside 3-7 cross, and that is Barrick Gold, GOLD. But to create the trigger, it's moved more than 2 average true ranges, so it's not going to qualify as a trigger. Even though I'm bullish on it, even though I think it goes higher, but the risk reward on it is just not good enough for the challenge algorithm. Now, I was asked today what happened to the market vibe trigger. If you'll remember, those of you who were here when we did the last test setup, we had in the execution, we had 20% of our cash laid out and put aside to trade the market vibe, right? And to trade when the market vibe creates new triggers. Not when it goes from bullish to neutral or bearish to neutral, but when it goes from neutral to bearish or neutral to bullish, to be able to trade some of those triggers. And one of the reasons that I had it in here for that last test is because of the fact that there will be times like this right now where the market makes an abrupt change, we don't get a lot of signals, right? So, had we bought some puts when the market vibe, turned bearish last week, we'd be running with the challenge trade and going forward, with the parameters there. Now, I decided to omit that part to this challenge simply for simplicity's sake. Again, it is something that I'm not going to bring back mid-challenge, but that you will see in future challenges that will be put in. And most likely, I will put a caveat in that of once we have 10,000 in gains, then we'll allocate, 4,000 or something like that to the market vibe and, trade when it makes bigger changes like what we saw last week, the more abrupt, more kind of in your face changes like what we are seeing right here, right now. But that is not in this current challenge, so not didn't do that last week, and not looking to do that here going forward. Just relying entirely on the signals. Now, I promised I would share the stats here for the challenge. We're 60 days in. We're actually 62 days in now. But a 60-day summary here for the challenge. This takes into account every trade that has been made so far and trade that has been closed so far. And I have the 30-day summation right here above and the 60-day summation right here below. Now, keep in mind, these summations are based on number of trading days, not calendar days. Okay, so there are, 92 trading days in this challenge? So we're about 2/3 of the way through here with it. Now, currently, the challenge is in all cash with 11,675 in gains after 60 trading days. Okay. The pace of gains has fallen. Let me correct that. It has fallen behind the 100K target as gains of about 40%, or gains are about 40% of what is needed for the 100K. One thing you're going to see in the coming, hopefully next month, is you'll see a new front page to Trader Minute. And it's going to go back to what TraderMan originally had with a scoreboard and, some of the statistical elements that used to have. And we're going back to that because, things are pretty automated, much easier to do nowadays. So, we're going to have that scoreboard up again. And there'll be a challenge progress bar that'll move, up and down and whatnot based on the challenge value. But, it won't be, oh, well, when we have 40,000 in gains, we're 40% of the way through. No, because of the way the challenge works and the scaling of things, we kind of have to think of it in terms of 5 doubles. And, currently, the challenge has 2 doubles. So it's about 40% of the way through, right? So, we're 66% of the way through the challenge and we're 40% of the way, kind of to that 100K. So, we're not on pace to hit the 100K like we were on the 30-day summation. And a lot of that is because of July. The number of trades for the challenge is slightly behind the expected pace with only 21 trades made. We've only made 21 trades. I expect about, 28 to 30, in a 60-day period, somewhere around there. So we are running a little bit low on that side, but we're not really running that low considering the season, right? Considering the summertime here. Now, 38% of the trades have hit their initial price target, which is significantly lower than the expected run rate. This is something where I expect this to be in that 58 to 60% range, and we only have 38% of signals have hit their initial price target here so far this challenge, and that is down very much from what I expect and what we've seen in the data. Now, we've seen, plenty of periods where it runs this low. It's not kind of alarming and, ooh, what's wrong and all of that. It just, it will balance out over time, but only 38% of the trades have hit their initial price target. Very, very low number. 47% of the trades have been stopped out due to hitting a time stop. This is significantly higher than expected, and it's just kind of the nature of what the market's been right here. It's not been a trender, up to this point. Now we're getting a big shot down right now, but we haven't seen a major trend, especially over the last 30 days. And then 15% of the trades have been stopped out due to hitting the stop price, which is significantly lower than expected. So, we haven't had as many trades hit their price targets, but we also haven't had as many trades hit their stop prices, right? And that's just kind of a characteristic of what we've seen out there, with a lot of things. But that's how things sit right here. I think if you were to tell me these numbers right here, 38, 47, and 15, at the beginning of the challenge, I'd guess that the challenge value is somewhere around $5,000. That's what I would guess, 5,000, 6,000, somewhere in that area. It's up around 15,000, so nice to see that. But anyway, that's kind of where things sit. The market is 2.27% higher during this challenge. This has not been a challenge where the market is ripped up. In fact, if we were to account Friday and today, the challenge would actually be red, or excuse me, the market would actually be red during the challenge here so far. In the last 30 trading days, the market has actually fallen by 0.59%. It's been flat over the last 30 days. It has been very flat. For most things. Every challenge trade has been a call here so far. And, that's not expected, but it's just kind of the way the cookie has crumbled here. We did buy, some gold calls and whatnot when the market was pretty bearish and, looking pretty bearish, but, everything's been calls. And then 22 out of 43 triggers have not been traded either due to a lack of cash or option values, right? So, here if we come into the entry triggers, I mean, we've had, something like a Bristol Myers and an Amazon, right? where Amazon, we just couldn't trade it. We didn't have enough cash. Same with Bristol. It's just those are going to happen throughout the challenge, and I expect that to happen. A few more untraded trades than kind of what I would expect, but not a number that is very surprising or alarming or says anything. Oh wait, we got to go adjust or anything like that. It's well within parameters there. Now this has not been a challenge that has taken off because of one or two really big gains. Where one or two trades have really carried the entire challenge. It's not what this challenge has been. In fact, the biggest gain in this challenge has been Bank of America for 2,300. Right, so we're sitting at a challenge just under 15,000, and our biggest gain is 2,300. Right, that's I don't really expect that. I would expect that we would have a trade that had a $6,000, $7,000 gain on it. We just haven't been fortunate enough to hit that yet. We've been in trades like a Bank of America twice where the stupid thing, triggers great, pop, we end up pulling 40% off, and then the stock just goes nowhere. And then it triggers again, and we get the pop, and then it just goes nowhere. So we're not getting those kind of secondary and tertiary follow-throughs here on trades, and so we're getting time stopped away and out of them. And fortunately, right, because had we not on both cases, our gains would have been severely muted, and in one case, probably our option value probably closing in on zero. I haven't looked at it, but I would suspect that is the case. So it's one where our biggest gain, Bank of America, our biggest loss, Honeywell, for just over $2,000. So we really haven't had a huge loss, really haven't had a huge gain in here. It's been just pretty much kind of tracking steady. Our average gain per trade is just over $500, per trade. So that's a little lower than I expect. But a lot of that has to do with only 38% of the trades hitting their initial price target there with that. So I've talked about July, and look, when we have months like July that are flat, I do expect the numbers to dip. We're going to see that, and then when months trend a little more sharply, we'll see the numbers raise up a little bit. And counterbalance there. But, I'm on record, many times now for saying that I expect the majority of the challenges to end between $10,000 and $20,000. I wish I could say, hey, everything's designed here so we go to 100K guaranteed every single time. But the risk factors are there, and, the change in market conditions and everything else, come into play. And so I expect that most challenges end somewhere between 10 and 20,000, where, a good third, 30 to 40% of them have a nice shot at hitting 100K, at least throughout the period. And we were tracking pretty good for a while. We could still get back on track with a couple good trades. But to give us that shot for the 100K. And then I expect about 20 to 30% of the challenges to go to zero. And that's what I expect based on all the data and the numbers that we have. And, so this is shaping up to be overall a very normal, what I expect to be normal challenge as we go forward. And, being able to bring in have the consistency of it. And I totally understand, some of the emotional elements that come into play when we're in individual trades and people jumping in, people jumping out and doing different things. But, when you really just kind of look at it, each and every trade's been made consistent time period, consistent strategy, consistent exits. There have only been 2 times where the exits have differed from the strategy, and that was when we hit the 10,000 in gains, or when the challenge hit 10,000, and that is when we were going to pull to 3,000, and then on Valero, where Valero last week yes, I know it was still in challenge parameters, and We weren't at our time stop, we weren't at our stock exit level or anything. But with what the market was doing and what the stock itself was doing, and this is where it sat at the close Thursday when I decided to back on out. Just I mentioned even at the time, I think crash risk is high, not just for Valero but for the market. And our option would have certainly crashed, right? So you won't see me do that very often, but when I do, when it's fairly obvious and I don't want to take that risk, I will. And so that's the only time I've stepped in and really altered things differently from what the algorithm is. And let's face it, had I not, we probably would have, we would have been stopped out on the price stop on Friday. Ended with a $2,000 loss, and still been in a in a similar position. Yeah, about 15% lower than what we are right here. So, that's where things sit. That's kind of what the data is shaping up to be here so far. We have the last third of the challenge to go. Again, we're running the challenge here till September 20th. I've been asked about the next challenge start date. We have not announced that yet. We have not decided on the start date here just yet. So, we not only have we not announced it, we haven't decided on it, and we'll decide on that, as we go forward here. But it's one of those where, it's doing what I expect. It's absolutely doing what I expect. Yes, the individual numbers are going to have some variance in them, right? But and I do expect more challenges to have some bigger gains and some bigger losses than what we've experienced. This one's been a little more muted in terms of the run up and the run down, but we'll have more wild challenges in the future. But we will continue to run with this style, with the algorithm, and absolutely looking forward to it here with the challenge. All right. One last thing I want to bring up, and that is on the market. There's market futures, right? Market futures. Please notice here how 25.45 up to 28.68, right? I mean, this is in less than 30 minutes. We saw, a 15-point rally in the market, just under a 15-point rally in the market, right? These upticks are going to be sizable. They're not going to be small. Right. In fact, some of these upticks will be, in fact, the price action that we saw in this 30 minutes right here was more price action than we saw in half of the days of July, right, throughout the entirety of a day. So they're going to be sizable. And, one thing we finally had come in here today, we have the 20K volume come in, which doesn't say, the market can't go lower, but does say, hey, chances of closing below this level are very small, very slim. So I would expect that, the market would close somewhere around this level, or at least not too far below this level. I do not have a trade based on the 20K volume, just simply because when I look at what's going on out there, and I see everybody running for the exits, kind of like what I talked about this morning. It's this mass move for the exits, and some of the more logical factors that oftentimes will play into the market, they're not going to play out in this type of environment. So I would not be surprised to see the market down another 80, 90 points tomorrow, even though it's incredibly oversold by almost every oversold metric. It is in that type of position where we could see a 2015 style move. And I showed it this morning, 2015, but let me go back to it. But here's 2015, and 1, 2, 3, just monster drop days. And I think the risk of that, is significantly elevated. And like I talked about last week when I said, hey, crash risk is elevated, right? It doesn't mean that the odds of a crash are high, right? But, most days the odds of a crash are pretty close to zero. Not right now. Not right now. And I think that is, something that will stay with us at least for the next few weeks. Market vibe here today is at -7, so it is still bearish, and it's not overly bearish to where you go, okay, it has to bounce here or it's bottomed here or anything like that. And so that's where the market sits, and market vibe kind of sums up my thoughts there on the market, at least at what's happening and what's going on right here at the moment. As I mentioned this morning, there will be buy opportunities. There will be shopping opportunities, for investors for the upside. But right now, trying to find them, trying to step into them, is definitely like trying to get into a crowded theater when everybody else is going out. Thanks for hopping on. Have yourselves a fantastic evening, and we'll talk to you tomorrow. Take care.